Mark Fuchs joins us. He is CEO of Fuchs Capital Partners, a hedge fund based in Singapore, focusing on Southeast Asian equities. Also joining us, or staying with us rather, from our studios up in Hong Kong, is our guest host, Giles Keating, Global Head of Research at Credit Suisse. Gentlemen, good morning to the both of you. Mark, let me start with you. I mean, your hedge fund focuses, your equity long short focus on Southeast Asia, deep value. Where do you stand on Bangkok equities?
Well, I think that it's you have to separate the question into two parts, namely the short term and the medium term. We're focused, and we have the luxury of focusing on longer duration bets, which are structural in nature, secular trends. Longer term, I think there's actually some value in Thailand when you look at the values in relationship to price to book, which is currently at around 1.5 times versus historic means of around 2. The PE ratio is around 9 times versus historic averages of around 13. If you look at the inverse of the PE, which is essentially the earnings yield, it's roughly around 11%, which is double the risk-free rate. Yeah. So, you know, there is actually some value there, but, you know, there is the prospect of a potential value trap to the extent that you've still got some political uncertainty.
Yeah, indeed. Well, I mean, we'll talk about value trap in just a bit, but I mean, what you're saying, at least initially, is if this market falls further, we're down about, I think, what, 20% so far this year for the SET, it could be even better for you, a better entry point.
Absolutely, and in dollar terms, the market's down about 33. So, you know, to the extent of dollar investors, there is some value on the table.
Okay, more?
Yeah, Mark, hey, listen, at the same time that we're getting reports out that some Thai companies have delayed their listings on the Bangkok set, a mobile phone-related company, phone retailer J-Mart, also building materials distributor Siam Global House, both saying they don't want to go into the market right now, given all this uncertainty. Would that suggest to you, then, that at least the local investor here in Thailand do not believe that even if you go in for value now, you're not going to get much upside, even in the best-case scenario?
Not necessarily. I mean, I think companies don't always list not because there isn't buyers. It's just that they value their company at a certain price. You know, to the extent that you look at the investment flows in the last several months, locals have been actually the net buyers, and it's actually the foreigners who have been the net sellers. But the one thing I would say is that foreigners have actually been net sellers to the tune of about $3 billion year to date, $2.5 to $3 billion. Now that's high, but it's not particularly capitulation selling by any means. And so, you know, to the extent that one would assume that that selling could be over, may be premature.
Yeah, Giles, over in Hong Kong, what's your position on Thai equities?
Yeah, I mean, I find myself very much in agreement with Mark's view that there's good long-term value there, but the short-term uncertainties are really just too great here. I mean, I guess what's sort of to me, the big question, and maybe Mark can sort of fill us in on this, is what is going to be the entry point? I mean, do we have to wait for a kind of combination of getting that capitulation in the market, of getting some kind of resolution on the political side, and of having the world situation turn around? I kind of suspect we need all three, and that could take us quite a long way sort of further forward from here, but I don't know what Mark feels on that.
Yeah, I very much agree, Giles, with everything you just said. You've got a couple of factors working. Firstly, you've got global headwinds, you know, that are not helping anyone. But arguably, actually, Thailand has thus far held up more than indeed some of the larger markets in Asia. That said, on a medium-term perspective, there is value. The only thing that I'm concerned with is that politically, it's not so much what actually happens, in my view. It's how it happens. If we actually see an abrupt, almost forcing of a situation in a way that people haven't mapped, or in no way a compromise, I think that investors, both foreign and local, will probably not respond nearly as well as if we see an outcome that is a degree of transition which is mapped in a more smooth manner.
Okay. Great stuff. Mark, great to talk to you, sir. Thanks for dropping by this morning. We've been talking to Mark Fuchs, the CEO of Fuchs Capital Partners, and we'll continue with our guest host, Giles Keating, Global Head of Research at Credit Suisse, live up in Hong Kong in just a little while. Next up on Squawk this Wednesday, we'll talk about the